Hello, and welcome to Trane Investment. This analysis is for Trane Technologies on the New York Stock Exchange as of 31st of July 2026, with a share price of $457. The full report is on donatien.ca. An elite climate control compounder with powerful secular tailwinds, quality 83, drivers 74, a record $12.1 billion backlog, whose stock is simply full at approximately 28 times forward, all three horizons. Hold a great business at a full price. Wait for a better entry, don't chase. Start with the business, because it is a good one. Trane Technologies is a global leader in climate control, heating, ventilation, and air conditioning, plus Thermo King transport refrigeration, designing, selling, and, crucially, servicing energy-efficient systems for commercial buildings, data centers, homes, and the cold chain. The prize is a large, high-margin recurring aftermarket, parts, service, controls, and digital on a growing installed base, which underwrites operating margins near 18% and a return on equity around 36%. The balance sheet is investment grade, net debt only about 0.6 times earnings, interest cover roughly 18 times. That earns a business quality score of 83. The debate has never been the company. Now the tailwinds, because they are real. Trane rides two powerful secular themes: building energy efficiency and, increasingly, data center thermal management. The second quarter print on the 30th of July was a beat and raise, adjusted earnings of $4.31, up 11%, organic revenue up 9%, and a record backlog of $12.1 billion, up 70%. Applied bookings rose 130%, a fourth straight quarter above 100, led by data center demand, and management raised full-year guidance to around $15.25. That accelerating driver picture lifts the driver score to 74. The engine is running. Here is the catch, and it is the whole story. Trane trades around 28 times forward earnings, roughly 34 times trailing against a warranted and sector guardrail, multiple near 22 to 23 times. That is full, a ratio of about 1.3. So the valuation ceiling caps the base at hold, and a hold never amplifies, however strong the driver. Valuation scores just 42. The good news is the entry has improved. A 9% washout dropped the stock to its rising 200-day line near $440, before a beat and raise bounce to $457, so the risk-reward is the most constructive it has been. But with no confirmed entry edge yet, conviction reads wait. Watch a reclaim of the 470 50-day line or a higher low that holds above 440. The risks here weigh at least as loudly as the tailwinds. The first is valuation itself. At a full multiple, the risk-reward is roughly symmetric from here. About 12% to the 510 base case, about 12% down to the $400 bear, which is precisely why the signal is hold, not buy. The second is cyclicality. Trane sells into commercial construction and capital spending budgets, and a slowdown or a pause in the data center cooling build-out would hit both bookings and the premium multiple at once. The third is execution. The guidance leans on a second-half step-up, so any stumble against a priced-for-perfection tape derates the stock quickly. Against that, the downside is cushioned. Quality 83, a record backlog, an investment-grade balance sheet, and analysts still around 15% above the price to a $525 consensus. Now weigh the risk against the reward. The bull case is roughly 27% above today, the base case, the most likely, about 11%, and the bear case a fall of about 13%. So you are risking about 13 to make 27. So, our call on Trane Technologies on the New York Stock Exchange: hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Trane Investment at trane.ca. The link to the full report is in the notes below. Have a great day.